Lloyd Blankfein, the CEO of Goldman Sachs, is here. Come on out, Mr. Blankfein. Lloyd, you were one of our first guests at the first DealBook conference.
Wow.
And since then, you've grown a beard.
Oh, I thought since then you've grown. No.
We have a lot to talk to you about.
Okay,
Let's just start straight up with a bit of a just state of the economy, and perhaps more importantly, the state of the markets. It feels toppy, potentially. People worry that the train left the station and they didn't get on the train. Where are we?
Well, it varies where you are in the world. I'd say in the U.S., we're in. It feels like we're in It feels like the economy is in good shape. The markets may be even more supported than warranted. It's because, we're in a situation for what I believe are good reasons and understandable reasons. We're in a situation where we have trend or actually above trend growth and money policy, as if we were in the middle of a deep recession. That's a good combination for asset prices and for equities.
But don't you worry? I always worry when everybody thinks everything is great that there's something inherently wrong.
Yeah, and everybody thinks that everything is inherently wrong, so therefore you can go the other way.
Do you think people think things are inherently wrong right now?
No, I think, look, in hindsight, it's a justification to say people think, the market is big. A lot of people are worried. I could give you a narrative that says a lot of people think that everybody thinks the market's higher and people being very timid about it. If you look in the price action, not to be too at the coal face, but and we'll see what happens. Very bad to be in the prediction business, but you see what happens even when the market goes down and they're waiting for them. Everyone's waiting, looking at their watches, waiting for it to go down 10% so they could buy it down 10.1%. It's never quite getting there. The price action is actually not that bad. But I'd say looking at the fundamentals of it, two things. There are a lot of positives for the economy, and you've ticked through these things before. From the energy situation to the resurgence of housing to really the most important thing is having reversed all the leverage that was in the system and kind of reset the clock in a lot of ways, both on the corporate side and also on the consumer side. And that'll play out. It doesn't mean we won't have a lot of anxiety or bad days or bad months or bad quarters. But the analogy I'd make, and maybe this sounds too euphoric, but when I got out of school in the late 70s, through the 1980 period, we had a period of time when you had double-digit unemployment, inflation, followed by money policy that led to double-digit unemployment, and big malaise, and just a very terrible time in the markets, in the economy for the U.S. And at the moment that people would have been their most desperate, if you look back, the sentiment was trailing the fact that the clock had been reset, and we really had a 20-year, positive period after that.
We talked to the Treasury Secretary earlier about oil and energy prices. Is there a bad side to energy prices coming down as far as they have?
Well, you can make a short-term or a sector bad call, bad aspect to it. So, for example, a big percentage of investment in the United States, capital investment, is in the oil sector. If they withdraw that, that's in the short term a negative. And you could go play. Look, can you make anything good out of a hurricane or a natural disaster that wipes out a lot of wealth in the country? Well, that's generally thought to be stimulative in the short term to the market because now people are going to spend. So you can take something that's a blessing, lower price of oil, which one should think of like a tax cut, and make it in the short term a negative by saying, oh, now people won't invest because now they'll have to abandon investment projects. So in the short term, or in this sector, in energy, which is a big part, and so you could look at the Dow index and say there's some negativity. I'd say there's another aspect to it which I think is a little convoluted, which is the people want to raise inflationary expectations, want to avoid deflation, and this is particularly pronounced in Europe. And that's really a means to an end. That's deflation. That's not the economy itself. That's a device for charging the economy. Well, sometimes that's become an object. So the mere fact that something is going to happen that's going to take prices down looms as a negative. Europe should be ecstatic. Is much more favored by the low energy cost, energy price. U.S. is relatively balanced between importing and exporting at this point. Europe is far and away an importer of oil, so it's a very big boon to their economy.
Where do you stand on China?
But they don't like the fact that it's deflationary.
That's true. China appears to be slowing down. At least that's what we hear. Is it even slower? Do you believe the numbers in China?
Do I believe the numbers? I believe there are numbers. There are, I would say that I think it's very hard to gauge, and it's hard to, and I'm not sure what they're measuring things in the same way. I'm not sure what they're measuring. I think it's a less sophisticated capital allocation system. I'm not sure that they're collecting the information the way we would in as sophisticated metric.
But you don't think they're manipulating the numbers?
I don't know. How do I know? I'm not taking it that they are. I'd say my overall view of China is that over the long term, they're going to do very well. I've said this, other times before. This could very well be the Chinese century, the way the 20th century was the American century, and America. It may have been the American century, but every year wasn't an American year. We had a lot of problems. In fact, we had a lot of problems more than 1 year in a row. We had a depression that lasted effectively 10 years, and it was still an awfully good century. And I wouldn't want to leave China with, with another 85 years to go in the century.
Where does that leave us then?
The United States?
Yeah.
Why in what way?
If this is the Chinese century,
it's not a zero-sum.
Do we become the Brits?
Their economy is going to be bigger than our economy, even though they're going to be poorer than us on a per capita basis. There's just a lot of people in China. So the fact that they're catching up, it's like being the person of the year. It doesn't mean you're the best, most fabulous person of the year. It means you're the one that's the pivotal. And it's your decision, that's the one that people watch. A lot of the incremental demand in the world is coming from China. Look, whether or not, the big question is whether the U.S. is going to grow at 2.75% or 3.75% on our size of economy. In China, an economy that's, depending on how confident you are in the metric, maybe 80%, maybe 100% the size of American economy, there the question is whether it's going to grow at 5% or 9%, or 4% and 9%. That is a much bigger question with a lot more consequence to growth in the world, incremental GDP in the world. And just to make this clear, any time that somebody is growing in the world, it's good for everybody in the world. Obviously, it's great for the country in which the growth is occurring, but it inures to the benefit of everyone because that incremental growth will result in incremental demand, which actually will draw support exports by other players as well.
Let me ask you a question about corporate America. You spend a lot of time with corporate clients who are thinking about what to do, and we often say that companies are sitting on a lot of cash, and they're not investing in capital, and they're not investing in jobs, and what are they doing? They're pursuing buybacks. How are we supposed to think about buybacks? Are buybacks a good thing or a bad thing, or are they artificially propping up the stock market?
Well, I don't think they're people are making decisions incrementally whether it's better to invest in, whether the returns are better to augment your business. But people end up with more capital than they could apply in their business. So sometimes it's quite sensible. Just to take your predicate for a second of the question, I don't think that's all that companies are doing. They're investing in making their businesses more efficient. They're not, now, by the way, efficiency sometimes could be the enemy of maximizing the labor force. A lot of the investment that's being done, what goes along with the efficient economy and the sharing economy and investment in technology is the capital you're spending is getting a return for the capital. It's not augmenting labor. In fact, your efficiencies are coming at the expense of labor. And that's creating all sorts of residual problems in the country. But that doesn't mean companies are not doing a lot.
How much do you worry about that? The technology labor transition issue, which is what I think you're referring to.
I think we have to adapt to it. I would no sooner want to bar it or regret it than I would, curse the tides or gravity or some natural evolutionary force. Things are going, history is filled with people trying to hold back progress. I consider the efficiency, the creation of new technologies, I consider that advancement. I just think we need new ways of deploying labor from industries where they're less needed into activities and services where they're more needed and where they get paid for doing it.
You just got me thinking about Uber. You guys, I think, are working with Uber to invest in Uber. Is that a company that you think, it's an extraordinary growth company at a $40 billion valuation? Do those things make sense to you?
Well, I'm going to avoid talking about a specific company and just talk about the nature of the companies, that are kind of in that space, and say, yeah, they can, phenomenal growth rates. They really are generating wealth. Now, you can look at the social aspect of that and say, they're creating wealth because of savings that are going by making people work at such a level of efficiency that you need fewer people.
Right.
And so if somebody has a $20 billion valuation...
Fewer people and lower labor costs.
Lower labor costs, well, sometimes, and sometimes some people are making more. But if you look at it and you say, who's getting that $20 billion? It's not going to labor. That $20 billion, which is a saving of what otherwise would have inured to labor, is attaching itself to the people who put up the capital to build the company we're talking about. And so all of a sudden you have a wealth creation, because maybe that $20 billion, some of that is wealth created, but some of it is wealth that's steered away from labor in aggregate to become a return on capital, i.e. the people who invested in the new technologies. And so you're seeing a little bit of a tension between capital and labor that I think is fueling people's anxiety and feeling of wealth discrepancy.
Right. Mergers and acquisitions, this is a DealBook conference. You guys do deals.
Yeah, from time to time.
From time to time. Do you think of deal making, and we are now back at a height, we have surpassed in terms of the number of transactions, volume, where we were in 2007.
Yeah, which is not necessarily the bar we're always seeking to.
Well, and that's the question. Is that a barometer? Is that a barometer of the market? Is that a barometer of confidence? What do you think of that as?
Well, the market issues are obviously provide a context. Higher, equity prices, low financing costs, and by the way, the feeling and the anxiety that financing costs are about to get higher. Also, perhaps you thought they were going to stay low forever. That's one thing that's not in a deflationary mode, the cost of money. Right. So the anxiety that rates are going to be higher can also fuel things that could be done at any time to be done today. That's why a little bit of inflation is better than a little bit of deflation. But you have to look at it as a burst of confidence on the one hand, and a feeling that coffers are full, strategies have been formed, but have been in abeyance for a while. Money is accumulated. I'd say the activists and shareholders in general, and let's call them activists. Most shareholders are activists now, or attached to activists now, and support that kind of activity. They're expecting more. Nobody wants CEOs to have an easy life, and they're clamoring. I think it's gotten to the point where CEOs don't have to go to their boards and say, this is why I want to do something. You have to defend yourself against the charge that you're not doing enough.
Do you think that activism is a good thing for the markets?
I think everything. Are
these guys short? Is it a short-term game? Is it a long-term game? When you look at a situation where it doesn't go well, do you say that democracy is just faulty? I mean, how do you?
Look, you couldn't. There are some things that should be run in a town hall, in a Vermont town hall, and you couldn't run the entire government like that on every issue. Then you have representative democracy. So these things sometimes are good, and sometimes aren't as good. I would say the movement towards more activism has been picked up and supported by I would say, traditional, long-term, conservative, historically management supportive institutional investors. And I think that is good evidence of the fact that the spur and the provocation of activists are appreciated by the market and do good. Couldn't they go further and become, could it become backbending and be a negative? Of course it can, and in some cases has.
Let me flip it around. What do you think of companies, and I'm thinking of Alibaba, you helped take them public, who have governance structures that effectively keep the founders in control and don't effectively allow the type of democracy that we've been talking about in the boardroom?
New York Times?
New York Times is one of them. Touché. Let me go in a different direction on you for a second. Is Arthur still here? No, he's not here. We talked to the Treasury Secretary a bit about inversions in this Burger King situation. Do you think that inversions are unpatriotic?
I think talking about, there's famous quotes. I went to law school. I studied tax law. I was a tax lawyer for 5 years before I went over to this side. I say this famous quote that it's not even a patriotic duty to maximize your taxes. I think people in the official sector have said this, predominantly what needs to be done is the tax law has to be written in a way that it doesn't stimulate the kind of behavior that you would like to avoid. That's how it is. It's people who manage companies are, my shareholders aren't just American. My activity, more than half my activity is outside the United States. I can't even tell you what percentage of my shareholder base is outside the United States. Probably a lot of it. People are charged with not evading tax, but appropriately organizing your affairs to avoid taxes.
But organizing your affairs to a mailbox doesn't feel as good as if you had a real headquarters. That's one thing. Do you look at it as a distinction or no?
Of course, there's a border that's in there somewhere. There's a point at which, when you and I have no specifics in mind, but there's doctrines within the tax law that says if you organize your affairs in such a way that there's no economic purpose other than tax, then the taxing authorities can look through that and get at the economic reality of a deal. Those tools are there right now to do that. But you'd really want to have more certainty. But the idea of telling somebody, you should go, left will cost you more, right will cost you left, it's your patriotic duty to go left, and you think, that's a weird situation to get into.
Okay, let me ask you about something else.
But by the way, that kind of pressure is a fact of life that bears on people who run companies, because who run companies in the world. I'm not saying it's not a real pressure and it should be dismissed, but I think that it shouldn't be what's relied upon to steer behavior.
Let me ask you about this, and it relates to the inversions because it came after the Antonio Weiss situation and all of this. The AFL-CIO, I wrote about this, sent letters to all the banks, including yours, about the idea that certain executives on their way out of leaving Wall Street onto Washington have been able to keep or get bonuses that they otherwise would have given up had they gone to a rival or retired or what have you.
Right.
Goldman Sachs, I don't need to say, has had lots of people, has a long tradition of executives going to Washington. Do you have a problem with it?
Do I have a problem with people being made to surrender the accumulated wealth the wealth they'd accumulated throughout their business career in order to have the privilege of serving the country? Is that the question?
That's one way to put it.
I would say the reason why you let people take their compensation out is so that you, and again, what people have is, the clamoring on bonuses. People should be required to be paid in stock. That stock should be forward stock that doesn't vest for a real long time, so that at any given moment, anybody who works on Wall Street has a lot of the income they earn for years and years and years accumulated in unvested stock. In order to take a public sector job, you have to relieve yourself of that conflict, so that stock has to be abandoned or it has to be vested and allowed to be sold. Now, it's hard enough to contemplate going through the process and what one has to do to serve the public, including the sacrifice of a big income in a lot of cases. And so generally, if you say you can't vest someone's stock, but it has to be abandoned, that's a backdoor way of saying you don't want anybody from these businesses
but hold on.
to ever go into
But
public
there's a lot of
service.
other businesses where people end up having to, where the bonus doesn't exist, that opportunity doesn't exist, and there are people who will tell you, and I, by the way, as you know, because I've written about it, I happen to agree with you, but I'll take the other side of it, which is to say that the public looks at it and thinks there is a bribe going on. They think that there's something amiss. I mean, there are people who have that view. You've heard that before. I'm not the first person to say that. You're looking at me like I'm crazy.
That's to me is like lower energy prices is bad for the economy. It just doesn't compute for me.
It
But
doesn't.
anyway,
It doesn't.
no, it doesn't resonate. But anyway,
But to the idea that this is public service, and that if you have to give up a little bit of something on your way to public service, you should give it up.
well, you have to think of the interaction of the clamoring for people in finance to be paid in stock that vests over a very long period. So more of it is coming in that form for a longer period. People are giving up a substantial amount of the accumulated earnings of the prior years. It just, you're really asking somebody for a lot to do that. Some people will do it, but why does the country benefited from making something that's hard so much harder? What's the advantage of it? For what purpose?
Okay, let me ask you a separate Washington question then. I hear that Rand Paul is coming to visit Goldman Sachs next week, and you've had a lot of different potential candidates come through to meet with different people.
We have a speaker program. We also had 2 weeks ago, we had the Cardinal in and Derek Jeter.
I think Ted Cruz came too.
Ted Cruz came.
Ted Cruz came. Who are you supporting?
Derek Jeter.
You've historically supported Democrats. Where are you on Hillary Clinton? Hillary Clinton has obviously had a connection with your firm through 10,000 Women and all sorts of other things.
Well, she had a connection to the firm in that she was the New York senator, and so from time to time she was a policymaker and represented the people of New York, for which we're an important industry. I've always been a fan of Hillary Clinton.
Is it a liability that she has a relationship with Wall Street?
No, I mean, no, I think it's a virtue to have a relationship with a lot of institutions and a lot of parts of society. I would say if you put in the word excessively bound, I could agree with you. But I think what's happening now, there's now a litmus that if you have a relationship with anyone from this sector, and by the way, in a different era, it might be the military. If you touch, I remember when I was young and if you touch the military in any way, that was such a big pejorative. You couldn't imagine that now in a post 9/11 era, but in a post Vietnam era, if you touched anybody who had a connection to the military, that was a litmus that you couldn't, that was bad. Energy. If you touched energy, right now it's Wall Street, and I think that's a very dangerous place to be. I think people in political life should be a bridge among all these different groups. It's certainly no virtue. I certainly don't think it's a virtue to declare something, a big segment of the economy off limits.
We have a couple of minutes. Why don't we try to open it up and take a couple questions from the audience if we can. We really have to keep it tight. Jeff Sonnenfeld is in the front row. Why don't we give him the mic?
Hey, Jeff, how are you?
From Yale.
Lloyd, how are you?
Good.
Lloyd, 16 years ago, you guys led the largest IPO, talking about deals, in U.S. history at that time. And
Remind me, what was it 16 years ago?
it was your IPO.
Oh, our IPO.
Yeah.
Okay, I remember.
Well, it was easy. Nobody else would forget it.
15 years ago, but who's counting?
6 months later, 2009, right? It was May 2009?
99.
99, yeah. That was,
Let me check my watch. 14. Okay.
Yeah, okay, 14 years ago. UPS, I think 6 months after that, caught up with you guys and beat you, but you're still top 10. A lot of people were skeptical that you and UPS, as the world's largest partnerships, would be able to retain a partnership culture. You got very little, you would imagine, industrially with UPS, but in fact, some people argue that both of you have kept elements of that partnership culture alive somehow as public companies. And as Andrew was asking about the pressures of short-termism in his question that you had about activists, I just wonder How is it that the time frame and the partnership ethic, you just, I think, had 78 new partners brought in last month. How is partnership worth anything when they don't have shared ownership? It doesn't have the same equity and ownership and control issues of a partnership before, and yet you've kept a lot of that ethic alive. What is alive in there?
I think we run it very much like it's a partnership. We've recreated a lot of the indicia. We have a partnership within our company, and the economics of that partnership is a little bit different than everybody else. I run it as, there's a big difference between a senior partner and a CEO. CEO is structured to be an autocrat. A senior partner is a mutual agent with the people who work for him in a lot of ways, but I carry myself that way in the organization. The traditions of the firm have been upheld. I could give you the data points. When we make partners every 2 years, it's a very observed thing, very consequential, and written about in the media. Another
party member in China.
Well, you have to sometimes remind yourself there may be 1.3 billion Chinese, but there's only 80 million members of the Communist Party, which is kind of workable. Last week, at the beginning on Monday of this week, we had a retired partners get together at Goldman Sachs, where over 300 partners got together, and we had a panel, and the participants were John Whitehead and Steve Friedman and Hank Paulson and John Corzine, Bob Rubin, and then me as a little pimple at the end of that long gray line. And so it's people thought that the anxiety that was in our firm when we went public, were we going to lose that? And so far not.
We're going to have to run. How long do you do this for? I was just thinking, it's you and Jamie Dimon are really the last CEOs of the major banks that were in business during the financial crisis. When do you say you're done?
I don't think about it that way. This is what I do.
How long have you had this role now?
I've had this. I had this role for 8 years, 6 months, and 7 days.
Who's the longest running so far?
Well, if you go back, I think Sidney Weinberg beats me slightly at 39 years, from the teens through the 1960s. And I'd say in the modern era, I think I now have just nicked Hank.
Okay. Lloyd Blankfein, everybody. Thank you very, very much.
Thank you.
Appreciate it. Thank you so much. Really appreciate it.